All right, greetings everyone. We're going to review the Robinhood portfolio today, and the portfolio is up $57. So, investing $31,954 for the past week. I'm up 2%. For the past month, I am up 1%. For the past 3 months, I am up 9%, $2,821. For the past year, I am up 21%, $5,558. And from my all-time chart, I am up 20%. So I'm going to quickly to go over some stocks, guys. I've really been doing a lot of swing trading, and even though I said that in the previous videos, I'm trying to stop doing the swing trading. I guess I can't help myself because I'll look at some stocks and then I'll be like, okay, how can I improve my portfolio just a little bit more? And, my whole goal is, like I said, to get the portfolio up to $100,000 and to compound a lot of those dividends. So I'm really trying to look for some good valuations. There are some companies where they'll have a spike up, and then I'll look at the company, and then I'll be like, oh, okay, maybe it's time for me to move this money somewhere else. But let's just get into the portfolio. Apple, looks like Apple took a massive nosedive towards the end there. I don't know what really happened with the stock market. It seems like the stock market was kind of going down towards the ending of trading hours, but 279. I have 10 shares for an average cost of 179, and I am up $1,000 with Apple. So it finally hit $1,000, and I am up 55% with this company. So I really like Apple, and I'm going to continue to hold here. Johnson & Johnson at 143. My shares are 25, or average cost of 129. I have considered adding to Johnson & Johnson, but the spike up really has paused. It has caused me to pause a little bit. I haven't really consider adding at these levels, but I do want to add more. My total return is $356. So Johnson & Johnson, Dividend King. AbbVie, a Dividend Aristocrat, $89. I'm up 35%, $1,174 for an average cost of $65. Pretty good company, a good dividend yield on them. Again, they're a Dividend Aristocrat, a spinoff from Abbott Laboratories, but they are still a Dividend Aristocrat listed in the Dividend Aristocrats list. ExxonMobil, I am at the price is at $69.80. I have an average cost of $69.05. So I want to quickly say that there has been a stock that I've moved out of the portfolio. That was RDS.B. I think that would be Shell. Royal Dutch Shell shares B shares. So the thing is with them, and the reason why I've done this move, why did I put this money into ExxonMobil? So why did I sell Shell? Well, the reason why I sold Shell is because I have a long-term, well, at least I'm trying to have a long-term mindset. And ExxonMobil is a dividend aristocrat that is increasing their dividends over time. The problem with Shell and RDSB is, even though they do pay a very good dividend, I think the yield is closer to 7%. It might be 6%, but right now with the share price falling, the dividend yield goes up. So it's closer to 7%. But Shell has not been increasing their dividend at all. And what worries me about the company is that I'm going to be eaten up by inflation. So that's the reason why I have moved the $3,000 into ExxonMobil. And I moved that money into ExxonMobil because they are a dividend aristocrat that have been paying their dividends for a very long time. So this company, again, has zero growth. Past 5 years, they're down 20%. So oil is still looking very bearish, but it's starting to come back up a little bit. And again, my inflation worries of RDSB, since they're not growing their dividend, they're more concerned with stock buybacks at this time. We all know that Warren Buffett loves stock buybacks, but they have not been considering increasing their dividends. And for me, due to my age, I need compound investing. I need those dividends to go up, and I need the yields to be high. So I transferred that money into ExxonMobil. Altria, $51.36. I am up on this company 27%, $553. This is a consumer staple, pretty good percentage gain on them. Home Depot, 218. My average cost is 215.87 for 10 shares, $21.30. I believe the changes that I made for the portfolio is I moved some money out of Nextera Energy. I know, guys, I have a real hard time keeping that stock into the portfolio. I really love that stock, but Home Depot is down 8%, and for the past 3 months, it is down 5%. So this, to me, presented a buying opportunity for my portfolio. And Home Depot solves a lot of problems with my portfolio. My portfolio lacks a discretionary stock because I sold Disney around 137 or $137. So I should have just held on to Disney. It's a very good consumer discretionary services stock, but yeah, I didn't have a consumer discretionary stock in my portfolio. Home Depot is a consumer discretionary services stock, so that solved the issue. They are a retailer, so that solved another issue. I wanted a retailer into the portfolio that's not really affected by Amazon, whatever Amazon does. And they were a stock or company that paid dividends on a particular month that interested me. That was a month. The months that they paid dividends on was not really strong for my portfolio. So they really solved three problems all in one with just by buying the stock, and the stock has trended back here. But Home Depot, interesting to see that I've added them, and let's see what happens here. AT&T 38.74. I have 100 shares for an average cost of 36.69. So I think I added a lot more AT&T, and yeah, it's a good company. This is another dividend aristocrat. I think Home Depot is a dividend aristocrat. So you guys can see what I'm doing. I'm adding a whole bunch of these dividend aristocrats, these dividend kings into the portfolio. And I'm looking at dividend increases. That's the thing that I'm looking at with the portfolio. I know that's not going to happen each and every single earnings report. But the thing is that with these aristocrats and these kings, these dividend kings and dividend challengers, I hope that my portfolio grows over time as I continue to compound that $100 dividend that I'm getting. Excuse me, not that $100 dividend, the $100 payout from dividends each and every single month, because my portfolio is yielding closer to 4%. I think 4.5, but AT&T, interesting to see. Excuse me here. Interesting to see I've added 100 shares to AT&T. So Coca-Cola, $53.98. I am down $14 for Coca-Cola. This is overvalued a lot. And I continue to just add money to Coca-Cola because, again, the portfolio is generating $100 every single month. So the $100 is basically going into Coca-Cola, guys. Every time I get paid at the end of the month, I should have like around $100, $138. I'm going to just put it into Coca-Cola and compound its dividend yield. And I know that this is another dividend king or dividend aristocrat. I actually think it's a dividend king, but this stock is a lot of Warren Buffett owns Coca-Cola. He owns a lot of Coca-Cola, and this is a great consumer stable stock for my portfolio. Sort of manages the risk for Altria, because I know Altria is a little bit risky. It's a sin stock, but interesting to see that I'm putting the dividends into Coca-Cola. So new residential investment, 1625. I've been in and out of this company, so I've been doing a lot of swing trading with new residential investment, and I've been making money. I've been making a lot of money, but I need to be careful because the more swing trading that I do, the more my taxes go up. So I bought 100 shares for an average cost of $15.95, so I'm up $30 worth. New residential investment, and you factor in the dividend and I got from them, which was $100. So you tack on another $100 worth of dividends, and I believe I sold this around, I think I sold this around $16 so I actually made some capital appreciation. I bought back in at $15.95. I think my average cost was $15.75. So yeah, I've been doing swing trade. I've been making money with new residential investment. I've been in and out, but let's try to hold on here for a portfolio diversity of 5%. I wanted to try to lower the risk for this company because this company has an eye-opening dividend at 12%. That might not be accurate because the Robinhood doesn't update their dividend yields very, very much. But new residential investment has a very, very high dividend yield. So I don't want this to be a high percent of portfolio diversity. I don't want this to go into like the 10% portfolio diversity. I want to keep it at 5%, and we'll see what happens from there. I think this will pay $50. I think $50 for the month that it pays on. I think it's January and every 3 months. So, and the Power Shares S&P 500 high dividend, low volatility ETF continue to hold, and I continue to gain that monthly dividend, 125. So now I'm up my total return is up $600 with this ETF, and I'm up 12%. I have been looking to add another ETF to the portfolio. I've been thinking about adding ticker symbol VIG. Let's take a look at VIG and see where it is right now. The Vanguard Dividend Appreciation ETF, I've been thinking about adding VIG to the portfolio, but their dividend yield is quite low, and the PE ratio says that this is trading at 25 times earnings. So I just don't think that this is a very good buy right now. And for now, I think that just putting the dividends that I get each and every month, $100, I'm just going to keep putting that into Coca-Cola and compounding that dividend, since that dividend is closer to around 3% or so. And I believe that's going to be it for my portfolio, guys. Let's just take a look here. Yes, that is it. That is it for my portfolio. So I'm doing very well. My all-time chart shows that I'm up 20%. I'll easily take 20% over a low-yielding savings account or low-yielding bank account. Past year, I'm doing very well. Actually, my year chart is better than my all-time chart. So in the past year, I'm up 21%. So let's quickly take a look at this new sort of propeller chart here. Next 12-month income. So this shows pretty much what my dividends are going to be paying me for the 12-month period, $1,413. I like this site a lot because Propeller, like this little site a lot because it shows me exactly what I need to see. My next dividend payout December 19th, and the total payout will be $13.60. Unfortunately, I will not be getting that because I did not capture Home Depot's dividend. I do believe this is Home Depot. It says it right there, HD. And let's quickly take a look at the income. So there's a lot of things that you can do with this website. It really shows you what you can be expected. It shows you dividend estimations. It shows you dividends that are being declared. And you guys can see here that I'm getting just close to $100 each and every single month. So we see January, $111, February, $138, March, $100, and then it just repeats after that. So this site is very cool, guys. I really like this site. And let's take a look at the holdings here. So this is another thing that I wanted to show you guys. The portfolio says percentage of portfolio. It gives you a breakdown of how many shares you have. It breaks down the annualized payout per share, dividend yield. So it's really cool. I think this site is very handy. It shows you everything that you need to know. And let's take a look at the upcoming payout. So let's see, it gives you ex-dividend dates. Let's take a look at the dividends here. Just quickly going through this stuff. This is one that really caught my eye. Average annual dividend growth rate 10% for Apple. So they have been growing their dividends over time. RDSB had 0. They do not grow their dividends at all, and that concerned me a lot because they're going to be eaten up by inflation. But a very good company. I do not hate Shell at all. I actually think they have the best roadmap in terms of oil and energy. But for now, I'm putting my money into ExxonMobil, and I think that's still a pretty good bet here. So, they have an annual dividend growth rate of 4%. And you can see most of these dividend aristocrats, the dividend kings, are up to 20%, 23%, 11%. So that's a pretty high average annual dividend growth rate. And, the portfolio yield, you guys can see it right there, is yielding 4.5 percentage portfolio yield dividend gain. So this portfolio, if I can try to get that up to about 5% or so, I think I would be happy with that. But again, guys, that's going to be it for the video. I think this is quite a good handy site to have. I just think that this just tells me, it breaks down my whole portfolio in a nutshell. And I will be doing an M1 finance video sometime soon. I know I haven't done one in 2 months, but all that it really is basically, I think, the Vanguard S&P 500 ETF, which has 100% allocation of all my money into that ETF. So I'm going to show how much of a percentage gain I've been getting on that. But that's going to do it for the portfolio, guys, and I'll see you guys next time.